All right, Bulls and Bears, it is the day after. Welcome back to the channel. Really appreciate you being here. Obviously, the huge news with the election being in the rearview mirror. We have Trump out there as the winner. So we need to talk about what's going to happen. Prepare for shock. That's what a lot of people are saying. And if you look at some of the reports out there, ones like this out of Drudge here, world in shock. Obviously, they're talking about what transpired yesterday on November 5th. What does this mean for the economy? Well, obviously, the bankers feel like Trump is going to have their back with deregulation, probably calls for lower rates. Right? I know that sounds crazy in this high cost of living environment, but he's done it before. He's basically pressured the central bank to lower rates. We're going to talk about what that means for the markets, your finances, your money, the economy, and more. First, let's go ahead and start right here. All markets shot up on the news. And if you've been on this channel, you know that most stocks, about 90% of all stocks, are owned by the top 10%. So in other words, the top 10%, big money, they feel confident that this market's going to continue to go up and it's going to continue to be an easy money environment. What does this mean? This means more inflation, higher cost of living, right? There can't be any other way around it. Easy money, deregulation for the banks, easier to loan out money, AKA easier for people to borrow money and therefore spend money. It's going to be a higher cost of living, folks. Now, they can do some things to offset this high cost of living. We're going to have a big, if what has been said gets done, there's going to be a huge change in the migration situation, migrants coming here. And we could even see massive exiting of migrants, right? So we'll have to see, and that will affect the housing market. So there's some things that could be done to offset things that are going to cause higher prices and higher cost of living, right? Obviously, when you have 50 million more people competing for the same goods and services, prices are going to be higher. It's simple math, simple business, economics 101. Right. So we're going to see how this plays out. I don't think a lot of the things, though, that were being discussed will actually be done. I think a lot of it was talking points. A lot of it was trying to buy support, just like they tried to buy support with the whole tax situation where certain income was not going to be taxable. We'll see how it plays out, folks. I'm the type of person that you have to show me to make me believe it. And I'm not from Missouri, the show me state. I'm from Michigan, living in California now, but I have to see it to believe it. A lot of the stuff that's being talked about, I really don't think is going to be done. I think that a lot of people are going to be disappointed, even though the markets are excited, investors are excited. A lot of people are excited. I'm getting texts and emails telling me, what I should expect now out of the economy. I hope good things come out of this, but I am very, very doubtful. Now, some of the more hardcore supporters, fanatical supporters of Trump and his administration and his policies, they are really optimistic. I'm getting messages, and I've gotten messages for years telling me what's going to happen. There's a plan. There's going to be massive wealth creation for the people. I don't see that, folks. I see tax cuts for the rich, the mega wealthy, because the way I think a lot of people look at it is they figure that if the mega corporations can get tax cuts, then they're going to be more likely to create more jobs. That's the simple, what I think, view that most people have, including the new administration that's going to take over in January. But we'll have to see. We'll have to see how it plays out. Either way, we're going to be on top of all the latest news and financial situation for you. I'm still remaining very, very cautious here. We're going to talk about that in just a few minutes. First of all, crypto, Bitcoin, shot up here, folks. There's a lot of different cryptos we could talk about. I just keep my eye on the big one, even though I hold about 12 cryptos. I really don't watch the daily price too much on those. But Bitcoin shot up to right now it's 75,600 as I'm reading this. So it's pretty interesting how the markets are so confident that the new president is going to have their back. Now, there's a lot of headlines out there similar to this one here out of the Times. Trump's economic plans could worsen inflation, economists say. Could it? Absolutely. Could he bring down inflation? Not just that, could he actually bring prices down? Remember, inflation coming down just means prices are still going up, just less fast or at less of a pace, a lower pace than they were previously. So lower inflation doesn't do anybody any good, folks. It's better than higher inflation, obviously, but lower inflation just means prices are still going up. What we need is deflation. Nobody wants that under their watch. That's a big no-no because that messes with all the statistics that are put out there that support a quote-unquote good economy. Look at gross domestic product, right? An inflationary environment, that's good for the gross domestic product numbers because the more people spend, the more the gross domestic product factors that in with more spending. You see how this works, folks? So inflation actually is viewed as economic growth, folks. There's something called inflationary economic growth. I don't think anybody ever talks about that, but it's really not growth. It's just debt accumulation because when there's higher prices and inflation, it's only supported by higher and higher levels of debt amongst the consumer, amongst all levels of government, everywhere you look, for folks globally. That's just how it works, unfortunately. But even on the back of the huge news, we have a whole slew of new layoff announcements. Here's one here. Indiana manufacturer to shutter Tampa plant plans mass layoffs. Here's some others just announced in the last 24 hours. Indefinite layoffs expected at Toledo Assembly Complex. Stellantis announced more job cuts. Beaver County plant to close in January, resulting in 140 layoffs. So the layoff news is still coming in fast and furious. So not everyone's as optimistic. Obviously, if you're a business and you're barely scraping by, you've got to start making cuts, and you can't wait maybe a few months for a new administration to come in and make things easier, folks. So let me know what you think about all this. Will things get easier for the average person? Not the top 10%, not the owners of most of the stocks, not Wall Street, but the working class, the middle class, let's say the bottom 70%. And I say 70% because that's the number of people. Every survey that comes out, it's really close to 70% of people say they live paycheck to paycheck, meaning one missed paycheck and you're in trouble. There's debts and bills that you're not able to pay after only one missed paycheck. It's a sad state for people to be in, but I think people have become so accustomed to living paycheck to paycheck. They think that's normal. They think that's the way that it should be or the way it has to be, folks. U.S. cancels $1 billion of Somalia's debt in historic financial agreement. Recent article out of The Guardian. We just canceled $1.1 billion worth of debt. Just canceled it. Where'd it go? It was just deleted. We just canceled it, just like bankruptcy. Where does the debt go in bankruptcy? It gets deleted. Right? People say that money doesn't disappear, it just gets moved around. Well, you could argue that that's not true if we can just cancel debt, right? But then the consequences that come from that usually is inflationary, right? So we'll have to see how it plays out. But the people that wanted debt forgiveness, especially the student loan debtors, I'm sure they're not happy at seeing this news. Of course, this is not being widely reported, this cancellation of Somalia's debt, $1.1 billion. The media, I had to go to The Guardian to get that report, by the way. So I don't think most people even hear about that because they don't want people to know that debt can just be canceled. Otherwise, it rips away the whole facade off of everyone that's carrying debt. People are looking at this, or they would look at this if they knew this news, and they would say, what? How can they just cancel debt? Bring the article back up here again here. How can they just cancel debt? They can't do that. Why can't they cancel my debt? That's what people are saying. Folks, as soon as people find out that the debt can just be deleted, people will be very, very angry to find out that their debt is not being deleted. So, of course, it's not widely reported. We have to go to other news sources here for some of these stories to bring them to you here. Wall Street today is reporting the spike in yields, and the yield curve uninverts further as bond market gets spooked. So obviously U.S. holders of U.S. debt are concerned about the upcoming deregulation, possibly lower interest rates, more of an easy money environment because they're having to offer higher yields on these bonds to attract buyers. Personal bankruptcies jumped in October, folks. It continues to get worse, not better. If things were getting easier for most people, you wouldn't see stories like this. Now, it's not a huge number still, but it's still getting worse. It's increasing. In fact, let me give you the numbers compared to the previous month and year over year. This is out of National Mortgage Professional, a 16% increase from last year. So if you look at year over year, that's a pretty big increase, 16%. I mean, people think that inflation at 5%, they thought that was big year over year. This is an even bigger number, 16%. It's very significant. And it just shows that people are having a tougher and tougher time. Some good news, though. Car prices are down. The average used car price continued to slide during the third quarter, according to Cox Automotive. Used vehicle inventory is also up 5%, 5.6% year over year. Average selling prices for passenger vehicles of all ages are down 3.8% over the last 12 months. So there you go. A little bit of deflation, a little bit of relief, and at least something, better than everything going up in price, right? Sales slide for KFC and Burger King as global fast food struggles persist, right? Part of it is just the overall operating expenses that these businesses have to contend with. You would think with all the underwater commercial property loans that leases would start dropping on some of these businesses, including the buildings for fast food places. But also you have higher wages. The higher cost of living is affecting all businesses because there's a demand for higher wages nonstop, folks. It doesn't stop. So what do you think about all this, folks? Where are we headed? Do we need to brace for more inflation? Or is there going to be some miracles rolled out that are going to really change the trajectory right now, which I think is still inflationary? There's people out there saying that massive changes are going to take place, that we're actually going to see happen what a lot of the rhetoric was that was discussed on the campaign trail, etc. We're going to see how it plays out, folks. We're going to be on top of it for you. Be back for more updates very soon. Please make sure you subscribe. Stay ahead of the financial economic curve. As always, keep stacking. Bye for now. Peace.